Welcome to the Investors Community channel. Today, we're diving deep into the world of electric vehicles and exploring one of the most talked about companies in the industry, NIO. Is NIO a serious contender to Tesla's electric throne, or is it just another overhyped EV company? NIO has been making waves with its innovative technology, strategic partnerships, and aggressive expansion plans. But is it enough to challenge the dominance of Tesla, the undisputed leader in the EV market? In this video, we'll break down the key factors that make NIO a potential threat to Tesla, analyzing its strengths, weaknesses, opportunities, and threats. If you enjoy our content, be sure to hit the like button and subscribe for more valuable insights. NIO finds itself in a prime position to capitalize on the explosive growth of the Chinese electric vehicle market. China, being the world's largest auto market, is witnessing a massive shift towards electric vehicles, with sales of new energy vehicles skyrocketing. This surge in demand provides NIO with a significant home field advantage. Think about it, they have direct access to a massive and rapidly growing customer base right in their backyard. This gives them a huge leg up in terms of market penetration and brand recognition within China. And let's not forget about the Chinese government's strong support for the EV industry. They've implemented policies like subsidies and tax breaks to incentivize EV adoption. This favorable regulatory environment further fuels NIO's growth prospects in its domestic market. As the middle class expands, more and more people are able to afford premium electric vehicles like the ones NIO offers. The company is strategically positioned to ride the wave of EV adoption and establish itself as a dominant force in the world's largest auto market. However, it's important to remember that this rapid growth also attracts intense competition. While NIO initially targeted the premium EV segment, they've made a strategic move to capture a wider audience with the launch of their sub-brand, Onvo. Onvo focuses on more affordable EV models, directly challenging Tesla in the budget-friendly category. By creating a separate brand with a distinct focus on affordability, they can appeal to a much broader customer base without diluting the premium image of their NIO-branded vehicles. NIO is essentially attacking Tesla from both ends of the market. They have their premium offerings going head-to-head with Tesla's Model S and Model X, while Onvo takes on the more affordable Model 3 and Model Y. This two-pronged approach allows NIO to tap into different segments of the EV market and maximize their growth potential. The mass market appeal of Onvo could be a game-changer for NIO, propelling them to new heights in terms of sales volume and market share. However, entering the budget EV segment comes with its own set of challenges. NIO will need to maintain a delicate balance between affordability and profitability. But if NIO can execute their Onvo strategy effectively, it has the potential to disrupt the EV market and put immense pressure on Tesla's dominance. While NIO has established a strong presence in its home market of China, they're not content with being just a domestic player. They have ambitious plans to expand their reach globally, taking on Tesla in key international markets. NIO has already set its sights on Europe, with successful launches in Norway, Germany, the Netherlands, Denmark, and Sweden. They've also expanded into other regions, including North Africa. This international expansion is crucial for NIO's long-term growth and success. It allows them to diversify their revenue streams, reduce their reliance on the Chinese market, and establish themselves as a truly global EV brand. By venturing into new territories, NIO can tap into new customer bases, gain valuable experience in different markets, and further strengthen their brand recognition on a global scale. However, expanding internationally is not without its challenges. NIO faces fierce competition from established automakers and other EV startups in each market they enter. Despite these challenges, NIO's commitment to international expansion demonstrates their ambition to become a major player in the global EV market and challenge Tesla's dominance on a global stage. While NIO has achieved impressive growth in terms of revenue and sales volume, profitability remains a key concern for investors. Despite increasing demand for their EVs, NIO has yet to achieve consistent profitability. This lack of profitability can be attributed to several factors, including high research and development costs, significant investments in manufacturing capacity, and the expansion of their sales and service network. While these investments are essential for NIO's long-term growth, they also put a strain on their bottom line. Investors are keeping a close eye on NIO's path to profitability. as sustained losses could erode investor confidence and limit the stock's growth potential. In contrast, Tesla has been profitable for several years, benefiting from economies of scale, lower production costs, and higher margins. NIO needs to address its profitability challenges to gain the full confidence of investors and compete with Tesla on a level playing field. Achieving sustainable profitability will be crucial for NIO's long-term success and ability to challenge Tesla's dominance in the EV market. The electric vehicle market is becoming increasingly crowded with new players emerging all the time. NIO faces intense competition not only from established automakers but also from a wave of EV startups vying for market share. Tesla, with its first-mover advantage, strong brand recognition, and extensive charging network, remains the undisputed leader in the EV market. However, traditional automakers like Volkswagen, General Motors, Ford, and BMW are aggressively electrifying their lineups and investing heavily in EV technology. This influx of competition from both established players and ambitious startups creates a challenging landscape for NIO. They need to differentiate themselves from the competition, innovate constantly, and offer compelling products and services to stand out in the crowded EV market. NIO needs to stay ahead of the curve, adapt to changing market dynamics, and execute flawlessly to thrive in this highly competitive environment. As a Chinese company operating in a globalized market, NIO is exposed to various geopolitical risks and trade tensions, particularly between China and other major economies like the United States. Trade disputes, tariffs, and sanctions could disrupt NIO's supply chain, increase costs, and limit their access to certain markets. Geopolitical uncertainty can also negatively impact investor sentiment, leading to volatility in the stock market and affecting NIO's valuation. Additionally, government regulations and policies in different countries can create challenges for foreign companies. Changes in EV subsidies, emission standards, or data privacy laws could impact NIO's operations and profitability in different regions. Navigating these geopolitical complexities will be crucial for NIO's international expansion and overall success. So, is NIO the biggest threat to Tesla? NIO undoubtedly possesses significant strengths, including its strong position in the rapidly growing Chinese EV market, its innovative battery swapping technology, strategic partnerships, and ambitious global expansion plans. However, NIO also faces challenges such as profitability concerns, intense competition, geopolitical risks, and supply chain dependencies. NIO has the potential to become a major player in the global EV revolution, but only time will tell if they can outmaneuver the competition and achieve lasting success. See you in the next video. Don't forget to subscribe to not miss out on more helpful